Good morning, Kenyans.
Morning.
How was your weekend?
Good.
Morning, the seeing ladies. Hawa jamaa wa Man U na Liverpool hawajaamuka. Mwasi,
Yes, teacher.
did you send the link to everyone?
Yes, to the group.
You know, we had a very sportiful weekend. Maybe people are sleeping in.
Maybe.
Which team do you support? Do you like soccer?
I'm not a fan of.
Yeah, that's why I'm talking about these people. Especially if someone was supporting Eliud Kipchoge, he belongs to either Man U. They lost to Tottenham 6-1. And see Rebecca has joined. You can see we don't have men. We don't have men in this class today. So if someone lost now the marathon ya Kipchoge alafu wakachapwa watu wa Man U ama Liverpool wakachapwa 7 na Aston Villa, watu wa Arsenal ndio waliponea. They were playing with an underdog. So we'll start. Let me put my mic. Here in topic 3. A minute. Shut the wrong screen. Today we are looking into the Executors Account, and the main aim, or you know that the executor is the person who is in charge of the accounts of the deceased, whether the deceased was intestate or they were a testator, whether there was a will or there was no will. So the main objective is to prepare the estate of, or to prepare the accounts of the estates of the testator or the intestate, and ensure that it is shared to the beneficiary. So today we'll be looking at the executor's account. Can see my screen? Confirm you are seeing my screen. Somebody to
Yes.
confirm. So we are aware?
Yeah.
I'll say the main objective of the executor. The executor is a steward. They've been entrusted with the assets of the deceased, whether they died intestate or they died testators. So they are supposed to prepare estate accounts, recording all the assets or the owing liabilities before it is shared now to the beneficiaries. And in this case, we have two forms of entries. We have what we call the income, and we have what we call the capital items. We say where the estate has both a life tenant and a remainder man. Who is a life tenant? Who can tell us who is a life tenant? I said it will be good if we understand these terms from the word go, ab initio. Life tenant is the owner of the property until they die. Yeah. And then we have this person we are calling a remainder man. So the remainder man also has an ownership interest in the property, while the life tenant is alive, and he or she have an interest in ensuring that the life tenant does not damage the property or do anything that might affect its value in future, to up and including tying it as a collateral for a loan or a borrowing or attempting to sell it. So we have two people here who are interested parties. One of them is the life tenant, who is the owner of the property until they die. When you die, you own nothing. So you have to leave it to the people who are surviving you. So once they die, that's when we'll have now the remainder man coming on board. So it is necessary to segregate between now the interest of the life tenant in the income and that of the remainder man in the capital. So we normally say that the life tenant will enjoy the income until their final day of rest. So from there, everything else will be now transferred to the capital account. And this is now where the remainder man will take their mandate. So segregation is achieved through use of, we either separate the accounts or prepare them separately, or we use columns to split. And I would encourage people to be using columns because it's easier. It's easier. So when a life interest is a right of possession of the property, it can only last for the lifetime of its holder. From there, the remainder man takes over. So we adopt this through what we call apportionment, and there are two approaches to it. You either use what we call the statutory rules or the rules that were established in the equity. So there comes a time when the life tenant had so well stipulated in their will that this is how I've shared my assets. They could say 70% to A, 30% to B. But where there is no such equity established, then we follow what we call the statutory rules. Now, with the majority of items, it is relatively easy to decide whether they are capital or income. Only a few cases where it is not possible to allocate them completely. And in this case, it is necessary then to apportion them between either an income item or a capital item. The Apportionment Act sets out a number of situations in which the apportionment will be made and such division of the income or the capital items. And you will see this. And this is what we are calling the statutory apportionment. It's already given. It's a statute. It's like a law. We'll just be adopting. So there are also a number of situations where the statutory apportionment may not apply. And in this case, this is when now we have the attorney or the courts coming in to lay down the terms of dividing the assets of the testator or the intestate. So we have four main accounts that are required to achieve this. We have what we call the estate capital account. We have estate income account. We have estate cash book account. And we have the liabilities and assets accounts. Of course, this one will now be arising as the entries or the transactions come in. Now, part E, executors accounts and trusts accounts. There's a very thin line between an executor and a trustee. And we say that trustee will be holding the brief for the testator when they are still alive. And when they die, all the assets and the liabilities of the testator will be now transferred to the trust to manage it. So that's the major difference. Whereas the executor is supposed now to prepare and execute, the trustee is supposed now to prepare these books and maintain them in the trust, as advised now in the will. If the trust requires that they be there, let's say for a duration of 5 years after the death of the testator or the intestate, that is what will happen. The trustee will prepare the books, maintain them in the trust until such a time or until the maturity as postulated in the will. So executors and trustees accounts are similar. Both distinguish between the income items and the capital items. But the difference now occurs because of the death of the person. I've said that a trustee will be existing even when there is a life tenant. Are we together? But the executor becomes active once the life tenant dies. So trustees account may arise simply as an extension of the estate accounts where part of the deceased property is held in trust. But if it was not held in trust, then it will be executor's account. Are we there? We are saying that alternatively, trust accounts may arise as a result of a settlement inter vivos. And when we say inter vivos, this is a legal term to mean that a transfer or a gift that was made during the life of the testator or the grantor, the person who is giving it. What you are supposed to realize is that once that transfer of property is made during the lifetime, it will not be subjected to the taxes, the probate taxes, because they are not held as part of the testator's estate at death. So kindly note that if the settlement is inter vivos, it means that the gift or the transfer was made during the life of the testator, and therefore we don't subject it to what we are calling the probate taxes, which are normally allocated as the income tax. We deduct them after we get the net assets of the testator or the deceased person. So note particularly the following differences between the estate and trust, and these are the major differences. For the estate, on the death of the testator or an intestate, if there was no will, all assets, including income accrued up to the date of death, are capital. Are we there? So all the assets, including the income that was accrued, is posted as a capital item. So what comes after the death is what we realize as income. Now, when we go to the trust, on the death of a life tenant and a settlement, if followed by a remainder man, where we have a life tenant who is followed by a remainder man who will take up now after the death of the life tenant, all income up to the date of death belongs to the life tenant's estate. So it is income that will arise after the death of the life tenant together with the assets of the trust that will be due to the remainder man. So in the first case, we say that all the assets, including the income until the date of death, will be capitalized, or they'll be in the capital account. Any income that will come now after the death is what will go to the income column. But for the trust, we say that all income to the date of death belongs to the life tenant estate. But any income that will arise after the death and any asset that will come up after the death will be due to the remainder man. And we'll see this. Now, on the death of a life tenant and a settlement, we are talking of a settlement that is not inter vivos, who is succeeded by a further life tenant. So we have two life tenants. The first one dies, another life tenant takes over. So the income accrued up to the death of the former life tenant is due to his estate. It will go to the estate account, but any income accruing after his death will now be going to the succeeding life tenant. We are just talking of the bridge between now death and survivorship. So we want to know who takes what and at what time. Is it pre-death or is it post-death? Now these are the entries. Can go to the entries. And we are saying the assets of the estate or the trust, in both cases, various assets of the estate or trust will be debited to appropriate accounts and credited to the estate capital account. So you can see what we are debiting. We are debiting the related assets account, but crediting the estate capital account. The value at which the assets are introduced may vary, and it is as follows. In case of the estate or a trust, following an estate, we use what we call probate value. I don't want people here to be confused. When we are talking of the probate value, this is the value of the assets at the time of the person's death. So a probate valuation is basically a system that helps to value someone's asset when they pass away. There will be some changes, of course, because of the tax, what I was calling now the probate taxes. But it is more important to understand that that probate value is the value of the asset at the time of the death. And we said inter vivos is now the transfer of the property made during a person's lifetime, because you've seen it recurring. So in the case of inter vivos, the settlement will be made at market value. So market value is the prevailing rate at the date of settlement. If, for instance, let's say a plot of land was going for 2 million at the time that it was gifted by the life tenant, then that will be the market value. If during death, let's say the property is valued at 5 million, we will not take that. What we'll be reflecting is the market value, because that property was inter vivos. Are we there? And this person will not be paying, of course, the probate taxes, because they were not part of the testator's estate at death. Then we go the liabilities of the estate or the trust. And this is how we post them. The various liabilities, it will be the opposite of the assets. So the various liabilities of the estate or the trust will be credited. Assets were being debited and you are crediting the estate account. But in this case, we'll now be crediting the liabilities account and instead debiting the estate capital account. And then, of course, the balance on the estate capital account of the estate will represent the net value of the deceased estate. And this will be important because of the tax. I've said that you are going to apportion tax, just like the way we do earning before income tax when we are preparing the corporate accounts or the financial statements of the companies, of the limited companies. Then down there, we now net our corporate tax of 30% to get the earning after tax. So in this case, the balance on the capital account of the estate will represent the net value of the deceased estate. And this is what will now be subjected to the duties or the taxes. Now, depending on what the government or what the statutory says about the estate or about the net assets of the deceased person. Then we have what we are calling the apportionment. Now, when we are talking of the apportionment, this is the how we allocate. So the purpose of the apportionment rules is to provide a fair or a reasonable basis for dividing certain items between, of course, the conflicting interest of the life tenant and the remainder man. And the rules may occur either under statutory apportionment, variation of securities. If the testator or the intestate had some shares or invested in some securities, there should be a way of ensuring that there is equitable sharing of the investments that the deceased had. So for the statutory apportionment, where income has been received in respect of a period which bridges the date of death, must be apportioned between the two parts of the period on a time basis. And this applies to all the rents. We have the annuities, dividends, or similar items. So you can see the items are of income nature. Not many people will be fighting about the liabilities. Hiyo ni madeni. So it will reduce what they will take home as a share. But when it comes to any income item, they are really contentious. And that's why we are being guided by the three rules. You can either use the statutory or the variation of the securities. You know, they are not static unless they were preferred shares. But if it is cumulative, then we expect that the prices will be now oscillating depending on the forces of the demand and supply. And then we have the equitable apportionment, where we can assume they go home with 50-50. Now we have the following possibilities in the estate of a deceased person. One, investment with CUM-DIV quotation. And this is a short term of cumulative. When we talk of CUM-DIV, we are talking of the cumulative dividends. So when a stock is CUM dividend, it means that it has dividends. So when a company has declared that there will be a dividend in future, but it has not paid it up yet, this will be a CUM dividend until such a date when it will be cleared. And once it is cleared, it automatically converts into what we call ex-dividend date. So after that, the stock trades without any dividends rights. So we'll be coming to that. So we'll be looking at the amount accrued to death just before the deceased is declared dead. And this is where we are guided by the dates specifically. That's why we are talking of a bridge between the date of death and now the survivor, the survivorship or the remainder man, or the another life tenant taking over the assets of the deceased. So the amount accrued to death is credited in the capital account. And the column, the particular column here is the investment account. We'll give an example and see how it pans out. And then we have the amount accrued after death, which is credited in the income column. We have two columns. We've said we can either prepare separate accounts or we just assume one account and instead have the different columns. So the amount apportioned to capital should be transferred out of the investment account, maintaining the investment at its probate value. And this is very important. So we'll be closing this account and the amount will be now transferred to the estate capital account as a credit. It was debited in the investment account. Therefore, to close it, we are going to have a contra entry in the estate capital account. And we have an example here. We've been told the date of death is 30th June 20x5. The stocks were 6%, and these are treasury stock. And then the interest paid, this was done between 1st March and 30th September. And of course, securities held are at 2 millions, and they are being quoted at between 94 and 96 shillings. So this is what we've been given, and this is what you are supposed to work with. Yeah, I want you to copy this data somewhere because I want to open and to let us work from the Excel workbook. Have you copied this? Kindly copy these details. They'll help us in the posting. I'm giving you some time to copy.
Yams, put off the washing machine. It's making a lot of noise. Yams.
Yes, you're talking to me, Mercy.
No, sorry. I was talking to someone to put off the washing machine. It's making a lot of noise.
Okay, kindly mute yourself. So are we there? I want us to work from the Excel sheet. I can stop sharing, right? Let me share an Excel. And you said we have two ways to it. Let us use the columnar format. So the year is 20x5. Then we have the column for the nominal or the initial. First the item, let me now have so this is the item. Then we have the nominal value. Can see my workbook? Then we have the income items, and then we have the capital items. Don't know how to split this. Well, this is the debit side. Just have a copy, paste. But I have the other, make this bit thick. Merge these cells and call this an investment account. So there we are. So something like that. And then we've been given that the date of death was 30th June, and the stock in the treasury stock earning an interest of 6%, and this interest is paid between 1st March and 30th September. The reason why we are being guided on the start date is to know what to post in the income and the capital account between the duration. You can see from 1st March to 30th June will be 3 months. So we have the prepaid interest, and we are going to have the postpaid interest. And the assets that are held in the stock market are worth 2 million, and they are oscillating between a low of 94 and a high of 96. So the first entry as at the date of the death of the testator or the deceased, that will be 30th June. Mute yourself when you join. On 30th June, what we have is the amount in the estate capital account. You say that this account will be credited, and then we are going to debit the investment account. So we are going to have the estate capital account. And the nominal, we know that is 2 million, right? Need not write all these zeros. I can say my figures here in 3 notes. So for purposes of so my figures are in 3 notes, or they're in millions. So we've done the first transaction, and this transaction will be done immediately. This is capital. Immediately we have the dev announced. So we are going to credit the capital account and we are going to debit the investment account. And this is what we are concerned with because we are talking of the stakes here, or the shares. We are talking of the shares that were already trading in the treasury. And we've been told that they had a nominal value of 2 million, right? So that is the first entry. So this is the stock at dev on 30th June. What is the interest that was paid pre-dev? What do you think was paid pre-dev? Being told that this guy died on 30th June, the interest that is being paid is between 1st March and 30th September. We are saying that all the amount that was accrued to dev needs to be credited in the capital column of the investment account. And I'm asking for that figure. The amount accrued to dev. Guys, you better talk. How many months are they?
Up to June.
Yes, March to June. March, 1st March to 30th June. Kindly note of the dates.
4 months.
4 months.
3 months.
Those are 3 months, isn't it?
Yes.
Because we are paying us at the end, isn't it? So what is 6% of 2 million?
120,000.
20,000.
Is 120,000. But this is the interest that is payable per year, isn't it?
Yeah.
So we are going to get the fraction of the year, which is 3/12. What are we going to get?
30,000.
It is 30,000. So that is the figure that will be credited in the investment account on the capital column, because this is a capital. We say that anything that was paid before the death of the testator is capitalized, right? So we are going to have that figure here. So we'll say that will be on 30th June. No, but the figure, the amount is being paid in 30th September, isn't it? So this will be the estate. You'll assume it is being paid by cash. So we are going to talk of the estate cash book, and you say that the figure will go to the capital column of the investment account. So I can just indicate here for purposes of guiding you that this is pre-death. Because from this you are going to post now the post-death. Are we there? So on the same 30th of September, we have the same figures going to the cash book. You just copy and paste this. But now post-death. So what will be the figure for post-death? It will be the figures, or it will be the interest that accrued between 1st July and 30th of September. How many months? There are still 3 months, isn't it? So this will be an income. So you said that all the amount accrued after the death of the testator is supposed to be recorded as income in the investment account. So there we are. Skip. So there we are. Those are the only entries. So the only other entry that is remaining, we've said that this book is normally closed. So the amount apportioned to capital should be transferred out to the investment account to maintain now this account as the probate value. So we are going to credit the estate capital account with the 30 to close this book. Are we together? So on that September, let me just jump one line. So on 30th September, we want to close this account, and we are closing it by debiting the investment account and crediting the estate capital account. To retain this account at probate value. So the amount that will go to the account will be this amount that was capitalized. So you are going to close that account with that amount. So what amount is left as capital? Which figure should we put here? This is nominal. Remember, the 2 million is nominal. Which is the actual figure? As at the time of death of the testator. The examiner has told us that the stake or the stock was going for, it had been quoted at between 94, a low of 94 and a high of 96. And remember, we are supposed to be guided by prudence concept. We are not supposed to overstate or understate. So the thumb rule is we take the lowest, add 0.5, we multiply by the nominal. So our figure here is 94, that was the lowest. So we'll be talking of 94.5, we're adding a 0.5 and we multiply by the nominal value. What are we going to get?
$189,000.
Yes, so this is the best value that we can put the capital or the stake that is at the stock exchange or the securities market. But this figure is not necessary. You see, we'll be guided. As at the point when the executor will now be paying out, they'll be having the actual cost of the securities at the market. But if you were to close the books today, the fair value will be the 1890. Are we there? Tuko sawa hadi hapo? So that is a case of CAMDIV, or where we have the cumulative dividend. You can see what you've done. You go to get it right here. So you debited the investment account at its full value and credited the estate capital account. But the assets that will be capitalized at death will be the interest that is payable to the deceased before they died. Any other accrued amounts will be treated as income. And that's the figure that we've posted here. This is what now the remainder man will be taking. And that is why we are closing the book with that amount to be transferred now to the estate capital account. So whatever will be left here is the probate value for purposes of deducting the taxes. Any question? So I can stop sharing and go back to the notes. So that is scenario one, when we had a cumulative dividend. Now we go to the investment with X dividend quotation. And when we are talking of the X dividend, we are being guided here by merely the dates. So X dividend date for stocks is usually set one business day before the record date. Should be knowing this. For example, if you purchase a stock on its ex-dividend date or after, you will not receive the next dividend payment. Instead, the seller will get the dividend. You remember that? So if you purchase before the ex-dividend date, you get the dividend. If you do it after, the dividend goes to the seller, not the buyer. So kindly note the dates. So when we are talking of the investment with ex-dividend quotation, will be debited to the investment account at its ex-dividend value. So the full impending dividend will also be debited to the investment account. Full value. So when the dividend is subsequently received, it will be apportioned in the same way as we apportioned the latter. So we are going to have the pre-dividend and we are going to have the post-death. So it depends on the death of the testator. This is what will be guiding us. So if it is ex-dividend date, we'll still be guided by the date of death, which is 30th of June. So when the dividend is, now a journal transfer will be made from the capital column of the investment account to the debit of the estate capital account in order to restore the book value of the investment to its probate value, just the way we treated it earlier. So we have an example here. Our date of death is still 30th June. You can see the stock are earning 3% per annum. And the interest is being paid now between 31st January and 31st July. And the assets held at the Kenyan stock market is worth 6 million, being quoted at a low of 86 and a high of 88. So there we are. Copy that. We need to do the entries. Giving you some time to transfer it elsewhere before I open the workbook. Assuming you've copied. Let me go back to the, just use the workbook that you are using for purpose of saving time. I'll need to delete the data. It's there. Also these dates, but I'll delete them as we go by. So who will guide us? The death is occurring on 30th June, and you know that the nominal value is 6 million. So that one is taken care of. Then we go to the dates now. We've been told that the stock, the interest was paid between 31st January and 31st July. Between 31st January and 31st July. But we know that it was paid on 31st July, only that the death came in between. So this is 31st, sorry, 31st July. (20x5). So this is 31st July. There we are. So same treatment. So what are we getting as the interest pre-death? What will be the interest pre-death? How many months are there between 31st January and 31st July?
6 months.
6.
8. 31st January. January is over.
6.
So there will be 6 months.
6 months.
Yeah.
Yeah, so we'll be working with 6 months, isn't it?
Yeah.
When is the interest being paid?
90,000.
Now I'm asking, when is the interest being paid? It is being paid on 31st,
Oh,
31st July, isn't it?
yes.
We are going to apportion it. When we are talking of pre-death, it will be apportioned. What you've gotten is for the year, isn't it? I want you to apportion it. So you've gotten 90,000, isn't it? We need to apportion it. So how many months? That is interest for how many months? That is interest for 6 months.
Yeah.
Isn't it? But we can see the deceased died on 30th June. So we cannot subject the month of July good amount for this person. So we prorate it. We do 5/6 multiplied by 90,000 to get the pre-death interest, isn't it? That will be recorded on the capital column. So what is 5/6 of 90,000?
75,000.
So this will be 75,000. So that is our pre-death accrued interest. So what about the post-death? Post-death?
It is just for 1 month, Amma.
Yes, it is for 1 month. But it will be recorded in the income column because this will go now to the remainder month. So that will be 1/6 of 90,000, which is 15. is the remainder, right?
Yeah. Yeah.
And then from there now we close our books. Do we have any interest due?
No.
You want to tell me once this person dies, that's all? You know, the dividends are paid as at the end of the year, isn't it? Does it mean that we don't have any interest due? We've paid this
It's
guy
gonna be there.
31st July, isn't it? So what about the period between 1st August and 31st January of 20x6? We are going to have an interest due. Think about it.
So it's going to be for 6 months again.
When I was explaining, I said investment with X dividend quotation will be debited in the investment account at its X dividend value. You've done that, isn't it? The full impending dividend will also be debited to the investment account. So when the dividend is subsequently received, it will now be apportioned in the same way as above. So what is our full dividend? It is 90, isn't it? What is our interest due as at 30th June? What is due as at 30th June? When this guy is dying.
It was 75.
Yes?
Up to June, it was 75.
It will be 75, isn't it? But we know that the due, the accrued interest due that need to be transferred will be 90,000.
Yes.
It was paid after his death, isn't it?
Yep.
So on that 1st July, what we need to do is now to close this book by transferring the amount here that is accrued to the remainder man back to the capital column. And we are going to debit the investment with the total. So we are going to have on that 1st July, let me just jump one line. So on that 1st July, we have the estate capital account being closed with this figure of 15, just the way we've done the above transaction. So our interest, but we know that the interest that was due is supposed to be 90, which is now the 75 plus the 15.
15.
So our interest due. We jump one line to be neat. So our interest due will be 90. So everyone is getting how we are getting the 90. So suppose we are to close the books, what will be capitalized? We've been told that the capital, the assets held are worth 6 million, quoted at a low of 86 and a high of 88. So what will be the fair value? Will be 86.5 multiplied by 6 million. What do we get?
519,000.
519,000. So that will be 5190.
Yeah.
Yeah, so that will be, if we had been told that this amount is being shared, that will be the capitalized asset of the deceased. I'm just doing this for you to understand that when we are giving it a fair value, we just add a 0.5 to the lowest. assuming that it cannot go below that. We've already been given the ceiling and the floor. The ceiling is 88, the floor is 86. But because of prudence concept, you don't want to overstate the assets, then we are going by the equation.
It is 519, not 5190.
If 519,000.
Yeah.
The 1,000 is here.
Omega 5190, so it's supposed to be 519.
519.
Yeah.
Cannot be 519.
Juu kuna 1000 huko juu na jibu ni 519,000. Kuna 1000 huko juu, so ni 519. 519.
519.
Mm.
Very well, it's okay. So I stop sharing. Go back to the notes. A lot of back and forth. It's one of the advantage of blended learning. Well, now we have a case of interim dividend. Now, interim dividend may have been received by the deceased before death. This cannot be apportioned and belongs exclusively to capital. Why do you think this is the case? Why do you think this is the case, that this cannot be apportioned and belongs to exclusively to capital? Interim dividends is paid with final dividend, isn't it? So although it was declared, it will be paid together with the final dividend. So it will not be pre-death, it will be post-death. We've been told that the deceased died on 30th June. You can see the interim of 25 for the year was declared on 30th September, so after his death. Only that it was to be received on 31st May, but it cannot. It has to be paid at the end of the year with the final dividends. Are we there? So revenue recognition concept. We are realizing the revenue at the point of receiving it, not at the point of transaction, not at the transaction date. So can we record that? I want someone now to guide us. Having done the previous two, I want someone to guide us on the interim dividend. Same treatment. I'm willing to follow your instructions. So I'll be here, I'll stop sharing and bring the workbook so that we see how we are
We have
doing.
not finished copying.
Yes?
We have not finished copying.
Are we copying or working? Not
No,
copy.
copying the details. So.
Oh, I get back. Have I stopped sharing?
Mm-hmm.
Sorry for that. What am I sharing now?
Excel.
You can see the notes.
No, the worksheet on Excel, but when the notes.
They are there. Are we done? Let me know when you are done. Are we done?
Yeah.
So I can draw both this. No one willing to guide us? For the interim dividend, we don't even need the credit hand side of the. This is interim until it is paid. It will be reflecting once it's paid. We'll be dealing with the debit side of the investment account. So we've been told that the date of death was 30th June. The stock held are for BAT and the ordinary shares of 10 shillings, 2,000 ordinary shares of 10 shillings each, quoted at between 129 to 133. And we've been told that the interim dividend of 25% for the year to 30th September 20x5 was received on that 1st May. And then a final dividend of 100% for the year was ultimately paid on 30th November 20x5. So what we know is nominal, and this is being paid on 30th November. And we've been told that the year 100%. Year 2000. So just indicate here, you could indicate here. That is a final dividend for the year. Final dividend for the year. For us to be sure. So to know the amount that is payable, we are going to add the interim. So I can call this 100%. Clear, 100% final dividend for the year. And then we have 25% that was paid as interim before death. Interim before death. So 25% of the nominal will be
500.
500. Right?
Mm-hmm.
So do we know what was paid pre-death? The amount?
Mm. $1,500.
It's 1,000?
500.
How did you arrive at that? How many months pre-death? How many months are they? This guy died on 30th June 20x5.
Excuse me, sir.
Mhm.
Hello.
Yes, I can hear you.
Is the nominal value 2,000 or 20,000?
It's 20,000.
20,000.
Yeah, because they are valued at 10 shillings.
Mm.
Sorry. So even this will be 5,000, right?
Oh.
Yeah, they are valued at 10 shillings. So if 100% is 20,000, what will be 25?
5,000.
Right. Mhm. I'm asking for pre-death. How many months?
5.
There'll be 5 months.
He died on 30th June, yeah?
When was it paid?
May. That first May.
Then that cannot be 5.
It is 1.
It's 1, it's not 1. I want you to
It is true.
think on your feet. Interim of 25% for the year to 30th September was received on 31st May. So how many months are there between January and September?
Mm.
Interim of 25% for the year to 30th September.
6 months.
Do we take from January to September?
Yeah, we are taking from January to September. Why 6 months?
If it's January to September, then it's not 6.
So we are looking at the pre-death, isn't it? How many
Yeah.
months are there pre-death?
9.
Yeah, 9, isn't it? Post-death?
Yeah. 3.
I want us to agree. So is it true that it is 9 months for pre-death?
Not sure.
Yes, because you said it's from
See,
January
you're
to
not sure.
September.
It is written.
30th.
You see this, we are getting these instructions from the question, isn't it? And you are
Yeah.
doing interim of 25% for the year to 30th September. So we are taking the year where you've not been guided, you always take the financial year to be running from 1st January to 31st December, isn't it? So
Yeah.
it showed interim of 25% for the year to 30th September was received on 31st May. So it is for 9 months, but received on 31st of May. Agreed?
Mm-hmm.
So the pre-death are 9 months. So what does that give us? What figure are we placing in the capital account? Capital column. So this will be 9 months. Good, I indicate. And see contentious. What is that giving us?
15,000.
It's 15,000. How did you arrive at that figure? Oh, don't just give us a figure. You need to support it. Isn't it?
Yes.
Yeah, support
Hey,
your
Cecilia.
support your figure.
Okay, I took the 9/12
Mhm.
times the nominal value,
Which is,
20,000.
but we cannot take nominal value. Go to
Why?
the statement again.
You shall take
This is
50,000.
5% of the for the year. What is the total for the year?
20.
There is a reason why you are getting these figures, isn't it? So the total for the year will be
25.
Yeah, because it is the 100% final dividend and the interim of 25.
25.
Yeah.
Okay.
So that will give us, so it's
18,750.
9/12 of 25,000. What do you get?
18,750.
18,750. Then we have now the post-death. How many months?
3.
Yeah, post-death, 3 months. But remember, this will go to the income column because it is going to the remainder month.
6250.
3 months. So what are you getting?
6250.
6250.
Yeah.
There we are. Then are we supposed to deduct the interim that was paid? Are we supposed to deduct? Guys. I said an interim dividend may have been received by the deceased before death. This cannot be apportioned and belongs exclusively to capital. The interim dividend must be brought into account when apportioning the final dividend between income and capital. What are we supposed to do? While apportioning the final dividend, we are supposed to deduct. This amount will not go to the remainder amount, the 5,000. It was merely to give us the total figure, to know what was paid pre and what was paid post. Yeah, but we have to deduct it. So we are going to deduct that figure. So deduct interim from the capital account. And our interim is 5,000. So if you deduct that, what are you going to get? What figures are we transferring?
13,750.
Is 13?
750.
750. So that is the figure that will be taken to the account. Any question? didn't go to do a lot of exercises in this one. I want you to assume, just on the same question. Now let's assume that the 15% final, there was 15% final dividends instead of 100. We assume the same stake, but the interim, the final dividend was 15%, and the interim dividend was 11%. So we are assuming the death is coming on 31st, or sorry, on 30th June of 20x5. So our holding is still 2 million ordinary shares of 10 shillings. So you're just changing the figures for dividend received. I'm saying our final dividend to be 15%, our interim to be 11%.
The final dividend, it's going to be 3,000. And then the dividends before death, it's going to be 2,200.
2,200?
Yeah, but I'm not wrong. So you want me to go?
Yeah, that's okay.
Okay.
So pre-death will be?
Pre-death, it's going to be 2,200. And then post-death, it is 3,000.
Wonderful. Now assume the same example. Only that now I'm just playing with the dividend. But this time let us have the interim dividend to be 110.
110.
Yes. So final dividend 15%, interim dividend 110%. You just need to add a 0 to your answers.
Yeah. It's going to be 30,000.
It will be 30,000, no. Final dividend will still be 3,000.
Yeah.
What you add is the interim. So interim,
yeah, it's going to be 22,000.
So are we getting a total of 25,000?
Yes.
So our total stake will be 25,000.
Yeah, it's going to be 25.
So it will be shared still the same way.
Yeah.
You can see the interim dividend exceeds the amount apportionable to capital. So what will happen? In this case, our interim dividend exceeds amount apportionable to capital.
So we're not supposed to deduct it, or we're supposed to add.
If we deduct it, it will be negative. We will be eating into the equity. So what do you
So
think?
we are supposed to add.
An accounting student,
I think
what
we're
do you
supposed to
think
add.
will happen? I want you
Add
to
instead of deducting. Yes.
I want you to obey prudence concept. So what will happen when the interim dividend exceeds the amount apportionable to capital?
We will add the interim instead of deducting.
So everything now goes to income. What will be the whole final dividend? Will it be 25,000, 3,000, or 22,000?
The whole thing now, it's going to be 25.
No. You can see our interim dividend exceeds the amount apportioned. It's like saying sharing what you don't have, unless you start eating into the capital. You cannot share what you don't have. You see, this amount is being taken to the capital column, isn't it?
Mm-hmm.
This is the money that is going to the remainder man. Now you see, we paid 22,000 already to the deceased, isn't it?
Mm-hmm.
That was paid on 31st May. You cannot again come in November and pay the remainder man. Where are you going to get that money? And it is already reflecting in the deceased account before the death. So for prudence sake, the only amount that can go to the remainder man is 3,000, isn't it? Isn't
Yeah.
it?
Yeah.
Yes. In some instances, the examiner will ask you to comment on your answer. You just need to think on your feet. So we go on, just trying to play around with the interest to see how it can impede on the shareables. The other ones are obvious. Now for the arrears or preference dividend, we have the arrears are portioned according to the period of the profit and loss account out of which they are paid. In other words, we are saying that profit will be recognized when it is actually paid. Are we there? Not the period they relate. They'll be reflecting on the profit and loss account which they are paid, not when they relate. And we are doing this to avoid understating the profit. So prudence becomes very key. You cannot pay what you don't have. For instance, here we have the date of death is still 30th June. The stock for Kenya Power, 6% cumulative preference shares of 20 shillings each. And the equity held is 10,000 shares, quoted between 7.95 and 8.15. Then we have the dividend received on 30th November was 24% dividend, being 4 years arrears of cumulative preference dividend paid out of the profit for the year to 30th September. So what is the 24% dividend paid out for the period? We are still retaining our payment date to 30th November. So what will be the 24% paid out for the out of the profits? Our shares are 10,000. So we are getting 24% of 10,000.
2,400.
2,400. But the period is up to 30th November, isn't it?
Yeah.
So what do we have?
2,200.
2,200. It can't be. How many years? Kindly look. We have been told of, we've been guided of the years. How many years?
Oh, 4 years.
So it will be 4 multiplied by 24 over 100
10,000.
multiplied by 10,000. Then we multiply by 9 over 12. It's being paid until 30th November, isn't it? 30th November. It is the 30th November. So we are talking of 11 over 12. Sorry.
Sure, yes, it is 2,200.
It is 2,200.
Yes.
Now let's go step by step. What is 24% of 10,000? It is
2,400.
Isn't it? Multiply by 4, that will give us?
Oh, 9,600. I didn't multiply by 4.
You're supposed to multiply by 4. 4 years.
9,600.
Yes. So is everyone there?
I'm still confused. Why are we using 10,000 instead of 200,000?
We always use the ordinary shares. We
Okay.
always use the ordinary shares, my friend. We've only been told the 6% cumulative preference shares of 20 shillings each, isn't it? How many are they? How many are they? What is the equity held? Don't keep quiet and you've asked the question and you've answered. You don't want now to answer our question. Have we answered your question? Joram, or who is this? Who was it? Joram,
Yes?
have we answered your question?
Yeah, I have answered.
Okay. Now for case number 5, be told that dividends out of the capital profits are portioned on the same basis as dividend out of income. This according to the Ridotis rule. Now these are the rules that you are talking about, the statutory rules. Yeah. So the areas of preference dividend, you are following the Workley rule. Then we have the variation of securities. It would seem logical to carry out a strict apportionment between income and capital every time investment are bought or sold. If this were done, it would be necessary to divide the purchase price or the sales proceed between the pure capital element and the adjustable of income rights. Now in practice, this is not possible. Yeah, because we normally do the accounting as at the end of the period for purposes of convenience. So if we do that after every stocks are bought and paid, we apportion. It will be so complicated. We may never get the right figure. We are winding up. So on the purchase of investment, cumulative dividend, the purchase of investment cumulative dividend, suppose it was to be purchased. So the life tenant is entitled to the whole income when received, except where the investment is purchased, cumulative dividend, after the dividend has been declared. And I said why. That's because the person who will take the advantage of that situation is the buyer and not the seller. And that is according to the Peel's settled estate. Now, these were cases that were settled by court. Now we have the disposal of investment cumulative dividend. So the life tenant is not entitled to any of the sales proceeds. They are already dead. So this according to the Schofield and Redfern. You can Google these cases and see how they were held. Then you have the disposal of investment exclusive dividend. Now for this one, the whole dividend received after disposal belongs to the life tenant. So any organized course of action to the detriment of the life tenant or the remainder man would be actionable by the party as a breach of trust, which is of course true. Now if it is an ex-dividend, it can only belong to the other party. And then we have the equitable apportionments. There are 5 leading cases where the courts have laid down rules to meet specific situations in which there is a conflict of interest between the life tenant and remainder man. So equitable apportionment may be and frequently are barred by the will. So in this case, we'll follow the will. But we have 5 leading cases. We have the Hoare versus Earl of Dartmouth, where an estate contained unauthorized investment of a hazardous or wasting nature. For example, you have ammonium nitrate and you are holding it and it is hazardous. We said that a will not hold if whatever the goods that are being held are contraband, if you recall. Then we have the RE-R and the Chesterfield's Trust, where an estate contained non-income producing assets, which means there was no any profit to be shared. And that's why we say that if it is declared as a charitable good, it will remain as such, it's not shareable. Then we have the Al-Hussein versus Whittle concerning the payment of expenses out of the estate. I want you to go through these cases and see how they were upheld. Then we have the reference to Parkin's case concerning the payment of annuities out of the estate. And the last case is the Atkinson case. Where one of the assets of the estate is a mortgage for which there is an insufficient security and the loss eventually accrues to the trust, which means there was nothing to be paid. It was a loss already. And you don't need to have the details of these cases. No one will ever ask you. So I have a question here and the portal is down. So I don't know how I'm going to, Mwansi, how are you?
Yes,
Can I
I'm
share
good.
the question via your email and then you share to the group?
It's okay.
Because the portal is down. We attempt this question. And I've confirmed it's full. The other question that we had shared had a lapse. Did you see the reshared version in the portal? I extended the deadline to 10th. But this one is for attempting. This one is not an assignment. Give me your email address. You can text me.
Helen.
Kindly
Okay.
text me. I'll share you this question immediately. So
Okay.
kindly attempt this question. I want you to try and get the journal entries of what we've covered today. Any questions for me?
So I have a question.
Mhm.
For example, there's a will and the executors have apportioned the will, but there's no the net value of the estate. How do we find the residue of that estate?
Come again. The
For example,
executors
there's
have
this
apportioned.
will, yeah,
Uh-huh.
and then, but there is no the net value of the estate.
Mhm.
So how do we find the residue
So what
for
did
that estate?
no what did the executor share?
For example, there is free household effects and maybe the taxes and everything has been shared. But now there is no net value. How do we find the residue of the estate?
The value of the estate. You've been given the tax.
You have been given that apportionments of everything. For example, I've left 1 million for my sons each, and maybe there is the taxes, apportionments, and everything, but there is no net value
No,
of
then
the
the net
estate.
value is the shareable value plus the tax. We are sharing the net value, isn't it?
Uh-huh.
Now, if I held, for example, let's say I have 3 million.
Mm-hmm.
I have 2 sons.
Mm-hmm.
I share one 2 million, the other one 1 million, isn't it?
Mm-hmm.
Or let's say I share one 2 million, the other one 500,000, and then I paid a tax of 500,000. Can I get the net value of the estate?
Yeah.
Yeah, I would. What was shared was from net, isn't it?
Yeah.
Yeah, because we deduct all the expenses. So you put the expenses aside, because the first thing that we do before we share is to net off any expenses. We add back all the incomes, isn't it? Then we share.
Yeah.
Yeah.
Okay, thank you.
Any other concern? So have a nice day.
Same to you.
You too.
Okay, bye.